Zippity doo dah. It's a ZipRecruiter kind of day as the company just filed for an IPO. We'll dive into the numbers next on the special edition of the RegTech podcast. Hey again, RegTechies. Welcome to the only podcast that helps employers and recruiters connect with more candidates through technology, inspire conversations. Attracting talent through technology is changing rapidly, and that's why this show exists. First, this podcast is sponsored by our friends at Brazen. Go big or go home. That's the motto Brazen lives by. At the show, they walk the talk. They're offering RegTech podcast listeners an exclusive offer, which includes a $25 Amazon gift card, among other things we know you'll love. As the leading virtual event platform for talent acquisition and HR teams, Brazen is helping some of the top brands in the world like CVS Health, Spectrum, USC, and more connect, engage, and hire great candidates in our all-new virtual world. According to Kathy Hennessy, Executive Director of Talent Acquisition at Advent Health, one of the nation's largest nonprofit health systems, and a Brazen customer, quote, "With Brazen, we've seen our times drop by over 10 days since adopting virtual recruiting. When you add that up across the number of hires we do each year, that's significant, and that's 100% because of virtual," unquote. So if you're looking to level up your virtual recruiting experience, head over to brazen.com/RT. Again, brazen.com/RT for RegTech to get a custom demo, a free guide on how to host a virtual hiring event, and your $25 Amazon gift card. Now that's big. All right, so big news in the recruiting world. Last Friday, Ziprecruiter announced it's filed a registration statement on Form S1 with the U.S. Securities and Exchange Commission relating to a proposed public direct listing of its Class A common stock. Ziprecruiter intends to list its stock on the New York Stock Exchange under the symbol ZIP. Here to discuss that filing with me is Peter Zollman, publisher and editor of the In Group, which covers the recruitment marketplace industry as well. So Peter, great to have you. And
great to be here. Thank you.
Busy news day, right?
Big news day, and the IPO crazes are going strong.
Yeah, we'll get to that at the end. There are some other companies looking to go public. We'll talk about that. But let's talk about Ziprecruiter. This has been rumored for a while. It's finally here. And what's kind of your big takeaway from the filing as you read the document?
Well, first of all, it's not finally here yet because they filed their S1, but they did not set a date. However, it's coming. Yeah. The big takeaway is that Ziprecruiter was launched 10 years ago, 11 years ago in 2010. It was profitable in 2020, probably, although they don't say this in the filing, probably for the first year in its existence, which just goes to show when you want to cut back on the spending and instead focus on profitability, sometimes you can do that readily.
Yeah. Run us through some of the numbers they put in the filing, Peter.
Yeah, it's pretty interesting. Their revenue for 2020 didn't take a very big hit as a result of COVID. A lot of recruitment marketplaces around the world really took hard hits. They had to give away 6 months of free ads and so forth, or there were just no ads at all, and so forth and so on. But Ziprecruiter was down only 3%, which is huge. I mean, that's very impressive. And it's doubly impressive for another reason that we'll get to in a minute. So their revenue last year was $418 million with a net profit of $86 million. That's almost 20%. In 2019, it was 429, almost $430 million. So it went down about 12 million. But in 2019, they took a net loss of 6.3 million. So they went from a net loss of 6.3 million to a net profit of $86 million. Just a drop in revenue of 3%.
Yeah. I think I think their consumer brand probably helped them in that respect. Being that all their ads are out there, and when people were posting jobs, they heard the name Ziprecruiter maybe, and
They did very well. We haven't yet seen Indeed and Glassdoor numbers, but ZipRecruiter can be very proud of the revenue numbers. Put aside the profit numbers, which are, and I don't mean this in a pejorative way, but which are artificially pumped by cutting way back on marketing spend and staffing costs.
Yeah. So last year they cut staff. I think it was 40%, right?
Yeah. Almost 500 people, 492 people were laid off in March. They attributed it to COVID, but clearly those plans were in the works well before COVID. They cut their marketing and recruitment, their marketing and staffing spend by about let's see, they cut it from 276 million in 2019 to 191 million in 2020. So 31% cut in marketing and sales spending.
Okay.
That's huge. And then to maintain revenue despite those cuts, there's a lot you can wonder about.
Yeah, I guess the big question then is, for 2021, they're not going to cut staff again like they did in 2020. So the question is, how or will they be profitable at that point? But at that point, they'll probably be public once those numbers come out.
Well, and not only are they not going to cut staff for 2021, but they told us in October that they were down to about 850 employees, and that they were looking to hire 100 more.
Oh yeah.
So mainly in IT. So they're done cutting, or they said they were done cutting. And now they're looking to staff up in IT, but obviously not in marketing and sales. And look, if you can cut 50% of your marketing and sales team and still maintain sales, it makes you wonder, what were all those people doing, or why were they able to manage to cut and still do well in their revenue side?
Well, at this point, they say in there they've got 2.8 million employers in their database and 110 million job seekers. So at this point, they've got the channels already built in terms of marketing. And so it sort of makes sense to me as a former job board owner that, look, they've already spent all this money in the past 10 years getting all this data on all the employers and seekers out there. They don't have to spend as much money courting them these days. Obviously, they still need to keep up their marketing spend to compete with the likes of Indeed, which has the overall brand share out there. But they got a pretty substantial marketing channel that they already own, which they've already paid for in that sense.
Yep, and when you look at where ZipRecruiter was and where it's come, they've come a very, very long way in just 10 years.
Yeah.
Now, I mean, we could say that about a lot of businesses, Indeed and Glassdoor and a few others, and then we could say the opposite about a lot of businesses as well.
Yeah. I remember when ZipRecruiter first starting. Actually, I shared a cab with Ian Siegel one day at one of the events we were going to, and at the time they weren't even doing jobs. They were they started out as like a career site for recruiting staffing firms, basically, and they were building a business on that.
It appears they've found a formula that's working, and that they have certainly, one of the interesting things about the S1 was that they only published 2 years of financials.
Yeah.
And generally you'll see a 2-year or a 5-year or a 7-year track record in one of these. So they were a little less forthcoming than you might expect. But nevertheless, our assumption is that last year was the first year of profitability for them. They also had an interesting trend with programmatic programmatic and performance-based advertising grew 28% year over year, from $56 million to $71 million, while subscription revenue dropped 8% from 374 million to 347 million. So clearly they're benefiting from a shift to programmatic, and not only programmatic, but other forms of automated advertising, and their cost per click, corresponding revenue per paid engagement, which is, I think, translates to cost per click, was 42 cents in 2019, but 44 cents in 2020. Well, that doesn't sound like a lot, but if you're doing millions and millions and millions of clicks,
Yeah,
that's a substantial increase.
yeah, and that's only going up every year, cost per click. So I think Appcasts, if you read their report, I think the average CPC now is around 79 cents, I think, per click, something like
Yeah,
that.
I mean, and it varies from site to site, depending in large part, or at least depending in part on how niche or niche, if you prefer, the site is, and who their target audience is. But regardless, much better that the cost per click is going up than going down for Zip, and that they're maintained their revenue last year in an incredibly difficult year.
Yeah. Yeah, I give them a lot of credit. They've done a great job with their technology as well. I think they're constantly iterating, coming up with new features, and I give them an edge in terms of technology, in terms of that user experience versus Indeed, for example.
Well, it's interesting. We don't hire people often because everybody's a contractor, but we look for people from time to time. And I have gone back and forth between Indeed and Zip. And last time I used Zip, I found some twitchy stuff in their dashboard that just drove me a little crazy. So I said, okay, next time I'll go with Indeed. And we most recently we went with Indeed. We found a good candidate, but we came to the conclusion that next time we have to use Zip, because apparently they've made some changes to their dashboard that's going to make it a little easier for us.
Yeah. I want to quote a couple other things from the S1 that I thought were interesting. So, when it comes to profitability stuff, there's a lot of kind of warning language in this thing, right? Like, and I guess that's what S1 is supposed to do. It's supposed to inform you of all the risks involved in buying a stock. But listen to these few quotes here. So we have a history of net losses, anticipate increasing our operating expenses in the future, and may not sustain profitability. So hint, 2021 might not be as good a year. And it also says that for the years ended December 31st, 2019 and 2018, we incurred net losses of 6.3 million, like you said, and 25.4 million in 2018, respectively. It says here, we expect to make significant future expenditures related to the development expansion of our business, including investing in our technology to improve our marketplace, investing in sales and marketing channels to enhance our brand promotion efforts, and in conjunction with a bunch of other stuff. It also says our quarterly results may fluctuate significantly and may not fully reflect the underlying performance of our business, which makes our future results difficult to predict. And now I would say that's true. And the job board business kind of rises and falls with the job market. It's seasonal in a way, in terms of, January is a big month, summer jobs, November, December, really slow, things like that. So they put that out there in there. They also hint at international expansion, saying, quote, we plan to expand our international operations, which could subject us to additional costs and risks, and our continued expansion internationally may not be successful, it says. But they looks like they're going to do some international stuff as well. Right now, they're just in the US, right? They don't have anything else as far as job listings in other countries.
They do have operations in Israel.
Operations, but yeah.
I presume, although I don't know, I should know this, but I don't. I presume those are technology operations, because there are lots of people Logic has a big operation in Israel. A number of job boards have big technology operations in Israel, and hiring over there is not easy by any means, but it is easier to find tech help in Israel than in a lot of markets.
Yeah.
And an S1 or a stock prospectus, standard stock prospectus, is filled primarily with the disclaimers and the warnings, because they're required to do that, so nobody can say, oh, I didn't know you were competing with this company and that company. I didn't know that this was a possibility, etc. So they fill them up with warnings. It's very common. It's very standard. But they, as you said, they also give you some good clues as to where they are going or may be going and where their business is headed.
Yeah, I got to think they want to expand, into Canada and UK and those places. I mean, if they want to compete with the needs, especially if they want to grow as well. The U.S. is the growth can come from outside the U.S. as well. That's what Talent.com has learned.
Yeah, I mean, it's interesting because we see growth with Talent.com. We see growth with Jubal, which is a fascinating aggregator. By some measures, number 2, number 3 in the world, behind Indeed and Glassdoor. So there's still a lot of growth to be had, but the competitors are coming along as they tend to do.
Yeah. The other thing that got me thinking about this is that Wall Street traditionally is not kind of liked job marketplaces. If you look at Dice's stock today, if you look at what Monster stock was, these are not high growth companies anymore. And Ziprecruiter is not either, in my opinion. They're, they've lost money for a while. They finally made a profitability, but it's not a high margin business overall. So I'm curious to see how Wall Street reacts to this as well.
We've been saying for a number of years that over time, as recruitment sites become more efficient and as hiring strengthens, every good site will be able to raise rates. And raising rates is the ultimate way of generating growth when you've tapped out your growth in terms of getting 40% more listings or getting that sort of thing.
There is a ceiling to that though, Peter. You can't raise prices forever because there is a ceiling for for a paid posting, right? Basically Monster got it up to like $400 or $500 and that was it. Now it's actually way below that. And pricing in the US there's been a downward pressure on that because of all the free marketplaces out there, the Facebook job boards, the Google for Jobs, other competition out there, just giving away a free listing here and there. You can get a free listing on LinkedIn. You can get a free listing on Indeed these days. Even Ziprecruiter is giving away their listings. All that free stuff has really put downward pressure on job posting prices overall in the last 5 years.
And it will probably continue for a while because there are so many competitors. But as it consolidates around 2 or 3 major players, and I mean, you and I are both have been in this business long enough to remember when the Monster board was the job board, and Matt Ferguson came in as CEO of Career Builder, and he told me, I have 1 2-word goal: beat Monster. And then he was successful. But where are they now? Career Builder, Monster, they're not especially on many people's radar.
Yeah, I mean, it's to me, web businesses are temporary because the internet is so iterative and competitive. There's always somebody new coming along looking to take away your business, and that's what's happened in the job space. If you look at it historically over time, now Indeed is at the top of the heap. Now people are saying they're kind of resting on their laurels a bit, and and then you got also the competition coming on now, Talent.com, Jubal. and et cetera. So you won't always be in the top if you look historically at the overall business.
Well, the other thing to remember, though, is, and you know this very well, is you can have a very, very, very successful and profitable job board that is not in the top 5, not in the top 10, not in the top 20. There are some job boards that are generating $5, $10, $15 million worth of revenue a year that are generating very nice, very, very nice profits.
Yep.
That, rock along and do just fine, and are not, the owners are not complaining. You don't have to be a number one to be very profitable and very successful.
Yeah. Case in point, Craigslist. You've written about this extensively on the In-Group site. 50 people and $500 million in revenue now, or something like that.
Yeah, but they're down from $1 billion in revenue.
Yeah, still though. That's I never understood why Monster had thousands of employees when Craigslist did that with so little resources, right?
Totally different world. And Craigslist, much as I love Craigslist and I love Craig Newmark and what they've done, it very much appears that they're on a downhill slide and are past their prime.
Yeah, I mean, they've basically, Facebook. I think Facebook Jobs is the number one reason why. First of all, they're just Facebook Marketplace eating up Craigslist listings like crazy. I haven't used Craigslist in years. I use Facebook Marketplace now to sell stuff, or I think I forwarded a job to my daughter one day I saw on there, things like that. Yeah, and they haven't changed their site at all. So that's another reason why too. Even though they were lauded for creating a simple design, they never really did much after that with it. They didn't really iterate. And now
they feel people are very comfortable with their design,
yeah.
And that people would be dislocated if they changed it. And there are lots of sites that do a refresh every year or so, and then there are others that they're the only one that hasn't done a substantial refresh in 20-21 years. But the fact is, give Craigslist credit, it still works very well. It still works very fast. I have some serious issues with it about safety and security. But Craigslist, when you do a search on Craigslist, it is blazingly fast. And as you get bigger and bigger and bigger, that's harder and harder to do.
Yeah.
So give them credit for that.
Yeah, no, they probably created the most profitable classified business in the history, right?
In the world. By far. And Craig has done very, 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 very well for himself, but he's also done very, very well for the community. And I don't blame Craigslist and Craig Newmark for destroying newspapers as so many other people do. I think that's a myth. It's not true. But at the same time, boy, he's had some huge impact on the job markets and on the classified markets for stuff. I want to get rid of my used refrigerator. You can put it on Craigslist or now Facebook Marketplace and do very well. So give them, whether I have qualms about their safety issues or not, got to give them a lot of credit.
Absolutely. Well, it's been a great chat, Peter. We got a couple of things to just wrap up here. So 2021 could be the year of HR tech IPOs, because in addition to Ziprecruiter, today, Monday, on April 26th, Paycor, the HCM provider, announced the filing as well. And then we've got Phenom, which has talked about one of their investors recorded saying they're going to go public this year, as well as iCIMS maybe, and also possibly Talent.com. So it's looking to be a busy year from that kind of IPO perspective, right?
Looks like it. And it's one of those, you strike while the iron is hot.
Yep.
Sometimes things don't go as well as you would hope over the long term, but often, and the Zip IPO is a little unusual because the company is not taking additional money out. However, it unlocks value for the owners and shareholders and the investors,
Yeah,
especially
they
the big
let's just put what, over a couple hundred million into ZipRecruiter, something like
Yep.
that.
Yep. So, and it was valued a few years ago at 1.5 billion in 2018. So now, if it is valued at, for argument's sake, and please, this is not a prediction or a forecast or anything like that. But if it is now valued, for argument's sake, at 3 billion, the market will set that valuation. And it's interesting to see how that evolves.
Yeah. If you look at the current companies who are public in our space, there's a big disparity between the prices right now. You've got things like Dice, Recruiter.com, which is an over-the-counter stock, trading at a couple dollars each. And then you get things like Workday going for $250 a share. Paychex is $99. ServiceNow, $557 a share. So big. So I think like a Paycor is going to have a pretty big share price when they come out. But big disparity there between the job marketplaces and the HCM providers as far as value goes.
Well, and of course, you forgot the biggest one of all by far, which is Recruit Holdings of Japan. Many of the people in your audience probably haven't heard of Recruit, but it's a giant staffing company, which also just happens to have two small recruitment sites, Indeed and Glassdoor, the two biggest in the world. So, and it's publicly traded. It is run by a brilliant management that has a very Japanese cultural sensibility of long-term thinking. I'm sure they are focused as well on the next quarter, but they're focused more on the next 5, 10, 15, 20 years. So their stock has also done very well.
Yep. All right. Well, I think it's prediction time. So I predict the ZipRecruiter stock will open at, will be priced at around $17. That's my guess. You got any predictions?
I am wholly and totally clueless on where it will be priced, and don't even want to offer a guess other than to say one of the things that is typical about IPOs and does not apply in this case is that when there is an IPO, people look for the pop. If it went public at $7 and then the end of the day it closed at $28, people go, wow. But in fact, what that means is the company could have captured almost 4 times as much capital. In this case, because it is a direct listing, not a listing where they're capturing capital, that doesn't apply. But it'll still be interesting to see where it opens and where it ends up in 3 months, 6 months, 9 months as their quarterly numbers come out.
Yeah, it certainly will be. Well, Peter Zollman from the AIM Group, aimgroup.com, right?
aimgroup.com. And yep, we have an extensive analysis of the Zip thing on our website today. It is behind our paywall. But as soon as I hang up, I'm going to go open it up for the people who want to read what we had to say.
Very cool. Well, Peter, I appreciate your time today. Thanks for
Thank you.
Coming on and giving us the feedback, and we'll see you in the markets.
See you in the markets, or if we're really lucky this year, I hope to see you again at a conference in person. That would be wonderful. Take care.
All right. Thanks, Peter.
Bye-bye.
That will do for this episode of the RegTech Podcast. Be sure to follow us on the socials, Facebook, Twitter, LinkedIn, via the @RegTech Media handle. See every podcast, video, blog we publish. Shout out again to my sponsor, Brazen. Be sure to check them out for their virtual job fairs. For Peter Zollman, I'm Chris Russell. Thanks for listening, everyone. Remember, always be recruiting.